If you're working hard every single day, but at the end of the month, there's nothing left in your bank account, this video is for you. Hi, my name is Morgan Whalen. I'm a fractional CFO, and I work with 6 and 7-figure business owners every single day to help educate them on how they can improve to make the impact and income that they're looking to. So in this video, we're going to talk about how to calculate your gross margin, your net margin, and why those are the most important metrics to a financially healthy business. We're going to talk about examples depending on the type of business you're in, and we're going to talk about ways to improve it. All right, so let's get right into it. So when you're running your normal operations, you're going to have revenue coming in, and the cost to fulfill on the good or the service is going to be called cost of goods sold, or COGS for short. So COGS, COGS. And so what this is really, again, your cost to provide the good or to provide the service. So if you're selling t-shirts and you're selling a box of t-shirts, whatever it costs you to buy those t-shirts from the manufacturer, to put your logo or whatever it is on it, and then to ship it to someone's door, all the way from them seeing it online, clicking, yes, I want to buy it. Everything that happens behind the scenes, from the inventory to the logistics and shipping to get it to their door, is all the costs associated, or the cost of goods sold, with that product. And so any of those costs that you incur as the business owner, they would be your cost of goods sold. In a service-based business, your cost of goods sold is the actual person's time, or the labor hours associated with providing the service you have. So if you have a marketing agency, for example, and you have someone that costs you $4,000, and they're able to service 5 clients that cost, let's say, $4,000 a month. So then for $20,000 in revenue, it's costing you $4,000. So over here, 20,000 comes in minus 4,000. And so why is your gross profit, which is what the difference is here, so the 16,000 that's left over the 20,000, which equals 80%. So why is this number so important? Which is called your gross profit here, because typically that's one of your biggest expense categories in your business. So whether you are providing a product or a service, this number right here is the most important thing that you need to focus on to get financially healthy. If you are not seeing money hit your bank account at the end of the month and you're not getting paid as much as you want to, this is the starting point that you need to zero in on, focus in on, and figure out how to improve it. So if your gross profits are low, well, what do you need to start doing? Well, number one, you need to start tracking. So in psychology, this is called the observer effect, but anything we start to put our attention and our focus on, we start to naturally improve. So if you ever start watching your weight and you start measuring yourself every single day, you're gonna start paying attention to it. Should I eat this? Should I not eat that? And you're gonna have more of a conscious decision around that. So number one, we need to start tracking it. What is the actual number? Because we can't optimize what we don't measure. And if you want more precise and tactical tips on your business and how you can improve your margin, go ahead and click the link below in the description and sign up for our free financial focus newsletter, where I personally write each and every week things that you can do today to help improve your margins. So if increasing your profit sounds interesting to you, go ahead and click the link in the description and sign up for the free financial focus newsletter. First, we're going to track, and let's say your gross profits right now is around like 50% gross profit. So how do we get this number to go up? That's the question. Well, one, you can look at your labor costs and say, okay, I'm paying $4,000 for this person to provide this service. Can I find someone who could do it for $3,000? And so maybe if you hired someone in California or New York, where it's more expensive, maybe you might find someone in the middle of the United States. Or if you want to, you can outsource it outside of the United States, because any other country will pay less per hour than the United States does. So think Canada, think Europe, or if you want to, think India, think South America. There are other countries where there's talented people that are willing to work for less because their standard of living is less. That's one. Number two, something that you can also do is charge more. So if you had 5 clients, each paying $4,000, so you're making $20,000 a month, then you could see if you could raise the price. So go from $4,000 to $4,500, or from $4,500 to $5,000, right? And that will get you better margin. Other thing you could do is try to gain more efficiency. So with the same person, try to see if they can see more clients. So if they could see 5 right now as their max, try to see if you can get to 6 or to 7. With AI and technology, there's new things coming out every day to help save you time and to make you more efficient. Now, the thing that you want to be focused on here, be careful of, is you don't want to reduce your quality as you try to gain in efficiency. So those are 3 different ways in which you can increase your gross profit. And then after that, you have all these other expenses that come to run your business. So think about the rent, think about your sales team, think about your payroll and your software. So what these are called is your operating expenses. And so that's why you need to have high gross profits, because if you don't, then all of your money is going to be eaten up by your operating expenses. You're going to be left with zero. So if you had a business, if we go back to this, that had 50% gross profits, and then after you paid for all of your stuff here and your operating expenses, you were left with 5% net profits, well, then you're going to have a really hard time because you still got to pay taxes. You still got to save some money in case there's a rainy day and there's nothing left over for you. So we either need to work on getting the gross profits better, so going from 50 up to 55 up to 60, or we need to work on trying to work on reducing our operating expenses. But typically, these operating expenses are pretty fixed. So where a lot of your gains or margin can come from is your gross profits. So again, you really want to focus on this and find ways to improve it for your business. So I gave examples if you are a service business. What happens if you are an e-commerce business or you're selling a product? So again, if you go back to the example of buying shirts, is there someone else that can make it cheaper in a different country or a different location? Or if I buy in bulk, does that bring down my cost per unit? So again, you want to find ways to get these savings so they can pass through to your bottom line. Because let's say you increase your gross profits by 5%. So then you had before 5% net profits and you went from 5% to 10%. Well, that is 100% increase. So that's a huge jump between what you were doing before and what you're doing now. So every little bit counts in here. So if you want to start paying yourself more, if you want to have profits, if you want to be able to enjoy the benefits of being a business owner and to continually printing money, then you've got to learn ways to become more efficient at what you do. And it starts with your gross profits. If you found anything insightful or something that you're going to take away from this, let me know down in the comments below. Don't forget to leave a like, subscribe, and I'll catch you on the next one.